Hey everyone, and welcome back to the channel. Today, we're diving into a topic that has been causing quite a stir in the crypto community. While many are still riding the high of new all-time highs, one prominent analyst is sounding the alarm, suggesting Bitcoin could be headed for a dramatic fall. We're talking about a potential collapse all the way down to $10,000. Yes, you heard that right, 10,000. This prediction comes from none other than McGlone, a senior commodity strategist at Bloomberg Intelligence. So, is this a wild guess, or is there some serious logic behind this bearish call? Let's break it down and see what's really going on. First things first, who is McGlone and why should we pay attention to him? He's a seasoned analyst at Bloomberg, a major financial data and media company. His job is to analyze commodities and, more recently, the crypto market. He's been in this space for a while and his insights are respected, even if they sometimes go against the grain. So when he says Bitcoin could revisit $10,000, it's worth exploring his reasoning. He shared this view recently while discussing the current state of the market and even brought up Michael Saylor, one of Bitcoin's biggest advocates. The core of McGlone's argument is this: all the good news might already be priced in. Think about it. The launch of spot Bitcoin ETFs in the United States was a monumental event that everyone was waiting for. It was seen as the key to unlocking massive institutional investment. Well, it happened. The ETFs are here, and they've been incredibly successful, attracting billions of dollars. Another major bullish point was regulatory clarity. We're seeing policymakers and regulators around the world starting to acknowledge Bitcoin's place in the financial system. They're creating frameworks, which reduces uncertainty. And finally, institutional access, which used to be a huge hurdle, is no longer a major barrier. Big firms now have multiple ways to get exposure to Bitcoin. According to McGlone, when all the major anticipated catalysts have already occurred, the market often shifts gears. It moves from a phase of anticipation to a phase of reassessment. In the anticipation phase, everyone is excited about what's to come, and prices tend to pump based on future expectations. But once those events happen, the market starts to ask, okay, now what? The focus shifts from hype to actual valuation. Are the current prices justified by the new reality? McGlone believes that in this reassessment stage, the upside potential starts to shrink because the high expectations have already been met. The market needs a new, powerful narrative to keep pushing prices higher, and right now, it's not clear what that next big story will be. So, why the specific target of $10,000? Why not $15,000 or $20,000? McGlone points to the $10,000 level as a crucial historical price zone. To understand why, we need to go back to 2020. This was a pivotal year for Bitcoin. It was when MicroStrategy, led by the famous Michael Saylor, started its massive Bitcoin accumulation strategy. At that time, Bitcoin was trading right around that $10,000 mark. MicroStrategy's entry is widely seen as the starting gun for the major institutional-driven rally that followed. It signaled to the corporate world that holding Bitcoin on a company's balance sheet was a viable strategy. McGlone's theory is that markets move in long-term cycles. What goes up often comes back down to retest key levels. He suggests that Bitcoin could eventually revisit this $10,000 area as part of a natural, broader market rebalancing. Think of it like a pendulum. After swinging so high, it needs to swing back toward its starting point before finding a stable equilibrium. In this view, the $10,000 level isn't just a random number, it's the launchpad of the last major institutional bull run. A return to that level would essentially wipe out the gains from that entire cycle, resetting the stage for whatever comes next. It's a full circle kind of theory. Now, let us talk about another critical piece of McGlone's argument, the changing structure of the crypto market itself. This is something a lot of people overlook. Back in 2009, when Bitcoin was created, it was the one and only cryptocurrency. It had a powerful scarcity narrative. There was only one digital asset to choose from. Fast forward to today, and the landscape is completely different. McGlone estimates there are now roughly 28 million different crypto assets in existence. That's not a typo. 28 million. This explosive growth in the supply of alternative digital assets has fundamentally altered the market dynamics. The scarcity argument that was so central to Bitcoin's value proposition in the early days has been diluted. While Bitcoin's own supply is capped at 21 million, it's no longer the only game in town. Investors now have millions of other options, from major altcoins to countless meme coins and tokens. This massive expansion of supply, McGlone argues, creates competition for capital and attention, which inevitably weakens the unique position that Bitcoin once held. It's simple supply and demand. When the supply of something, in this case, crypto assets in general, explodes, it can put downward pressure on the value of individual assets within that category, including the leader, Bitcoin. It is also important to note that McGlone isn't just taking a shot at Bitcoin or its supporters. He specifically mentioned his respect for Michael Saylor. He acknowledged Saylor's huge influence and his pivotal role in shaping the 2020 bull market. Saylor's conviction and bold strategy inspired many other institutions to follow suit. However, and this is the key point, McGlone stresses that the market environment today is fundamentally different from 2020. Back then, interest rates were near zero, governments were pumping massive amounts of stimulus into the economy, and institutional interest was just starting to awaken. It was a perfect storm for an asset like Bitcoin. Today, the macroeconomic picture is vastly different. We've been through a period of high inflation and aggressive interest rate hikes by central banks around the world. The free money era is over. While rates might come down eventually, we're not going back to the zero-rate environment of 2020 anytime soon. This backdrop of tighter monetary policy is generally a headwind for risk assets like cryptocurrencies. So, the strategies that worked wonders in 2020 might not be as effective in today's environment. This is the context for McGlone's reiteration of his forecast. He believes that given this new reality, a return to the price levels seen when MicroStrategy first started buying is a real possibility. So, what should we make of all this? Is it time to panic and sell everything? Not necessarily. It's crucial to remember that this is one analyst's perspective. The crypto market is famous for its wide range of opinions, from super bullish predictions of $1 million per Bitcoin to these kinds of bearish calls. The truth is, no one has a crystal ball. McGlone's argument is a cautionary one, based on classic market cycle theory, macroeconomic factors, and changes in market structure. It is a reminder that markets don't go up in a straight line forever and that periods of correction and consolidation are healthy and normal. His points about the priced-in nature of the ETFs and the explosion in the number of crypto assets are thought-provoking. It forces us to think critically about what the next major driver for Bitcoin's price will be. Will it be further adoption? A global economic crisis where Bitcoin acts as a safe haven? Or something completely unexpected? On the other hand, the bulls will argue that the ETF inflows are just getting started, that global adoption is still in its infancy, and that the upcoming Bitcoin halving will create a supply shock that pushes prices much higher. They'll point to the fact that major financial institutions are now building infrastructure around Bitcoin, which provides a much stronger foundation than in previous cycles. Ultimately, McGlone's analysis serves as a valuable counterpoint to the overwhelming bullish sentiment we often see. It's a risk management perspective. Whether you believe Bitcoin is going to 10,000 or 100,000, it's always wise to consider the potential downsides and understand the arguments behind them. It helps you make more informed decisions and avoid getting caught up in hype. The $10,000 prediction might seem extreme, especially from where we are today, but the logic behind it, a market reassessment after major catalysts, a cyclical return to a key breakout level, and a changing market structure is based on established principles of financial analysis. It's a scenario worth keeping in the back of your mind, even if you remain a long-term bull. What do you think? Is Mike McGlone onto something, or is this prediction completely off the mark? Are we headed for a major correction, or is the bull run just getting started? Let me know your thoughts down in the comments. I read every single one. If you found this breakdown helpful and want to stay updated on all things crypto, make sure to hit that like button and subscribe to the channel. It really helps us out. Thanks for watching, and I'll see you in the next video.